Welcome to the Voice of Insurance. I'm Mark Gagan. Last week was a really busy one for me in London. It was one of those weeks where you get to the end and you fish through your jacket pocket and find lots and lots of business cards because you've been out to so many events. I started by giving a speech to a private gathering. Then the next day was at the Insider London event, which was really good and extremely well attended and had some incredibly high-powered keynote speakers and panel discussions. Then on Thursday, I went back to the same venue just off Fenchurch Street for rating agency Fitch's European Outlook. This was also really well attended and had some excellent speakers. So, if you're listening from outside London, which I know many of you are, the main takeaway is that the London market is in really good health and is grasping the nettle of market reform with an urgency and vigour that I haven't seen in at least 20 years. If the market manages to execute even half of the projects it has planned, it will be set fair for the next few decades at least. I think the other sign of the market being in such a healthy state is that there are well-funded new startups forming to take advantage of market conditions and the changing dynamics arising from some of the major consolidation that's been taking place. And that's what this podcast is all about, because right at the end of the week, I was lucky enough to catch up with Phil Smaje, who's the CEO, and Marcel Chad, who's the president of newly launched London-based aviation challenger broker Piiq Risk Partners. Piiq is part of BGC Partners, which is also the owner of wholesale brokers Ed Broking and Besso. It's a really interesting new addition to the lineup of London specialty intermediaries, and Phil and Marcel are both aviation veterans with really long careers at the major brokers. The timing is really good because whilst other segments of the global market are just hardening, there is no doubt at all that all parts of the aviation insurance and reinsurance markets are in full correction mode and are experiencing the kind of genuine hard market that doesn't come around very often. Anyway, do enjoy the listen. I think Phil and Marcel tell a really interesting story about Piiq at what is a pivotal time for the aviation market. My first question was to Phil, asking him to tell us the story behind the formation of Piiq and what was it all about.
So Piiq is an opportunity in a complex and high-profile sector to disrupt the status quo. We've done this because the market is fundamentally dominated by few, three major brokers in the class. It's been fairly stable, both in terms of individuals and expertise and where they reside, and within the client base. So there's been some movement of business, but nothing fundamental. Conversations went on, and it became obvious that there was interest from the backers in this particular class. They knew a little bit about it. And we've come in with the objective to build a business. It's different from where we've come from. We've both come from large broking houses. That's where our background is.
There already was a business, yeah.
We've had some encouraging signs and signals. And how are we trying to do this? So we're trying to do this by a mixture of the talent base. We both know a lot of people across the industry. We come from slightly different backgrounds. Marcel's focus in the past was predominantly around the aerospace manufacturing sector. If you go way back into my history, I had a background in satellite insurance and then spent some time focusing on some of the major airline business. So we understand the talent. What we think Piiq can bring is an entrepreneurial spirit with some independent thinking. When you understand a little bit more about our backers, BGC Partners, they are a financial services firm. So there's a medium to long term view about this investment, but they're also a technology firm. Some of the things they've done in terms of disruption around some of the non-core investments is significant. And clearly, when certainly for my part, I was thinking about the future of insurance broking. There's a combination of factors. There's a technology play, as I've said, but there's some thoughtfulness around data analytics as some customers get more thoughtful and sophisticated in terms of their needs from a broker. But you've got to marry up that with the talent. And clearly, so far, we've been significant in terms of the investment.
So is that you need that independent structure so that there's things like equity and things that are on offer to people who are coming to jump over? What about the timing, though? So you said the word disruption or disrupt twice there, Phil, but I'm going to ask Marcel. I mean, both of you have come from this large corporate background. So what is it about the timing? Why is it good now? I mean, there are some obvious large mergers that have happened. Was that it? Was that the trigger, or was there something else?
Well, it's a combination of factors, I think. As Philip referenced, we've both spent our entire careers working for the larger brokers, where one could take the view that specialty, and in particular aviation, is a rounding error. Although Willis and Marsh have large aviation businesses within the overall context of their larger organisations they're part of, they're tiny components. So we saw an opportunity to form a bespoke, boutique, highly specialised team, which is going to be relatively narrow but very deep. And at a point in time where we're seeing a change in market conditions, aviation's faced a soft market for some 10 or 15 years with some odd years where things have flattened out. We're now seeing a materially different market, and clients need the very best advice. And we've already started to demonstrate our ability to attract talent by the number of resignations and joiners that we've had to come to our new organisation.
So what's the plan? I mean, how many people do you need to make a difference in this space, to disrupt? And is there anything else disruptive? Is there technology? Often when we talk about disruption, you hear, it's usually somebody talking about insurtech or something like that. But is this like that, or is it really mostly about getting a good new place for independent-minded people to come and join?
I think it's a combination of factors. So today we have, including us, 31 colleagues either here or in the garden who'll be here by mid-year. I think that's a significant investment, and credit to Marcel and team whilst I was sitting in the garden in sort of launching the business in such a significant way. People talk about technology a lot. One of the things that we don't want to do is turn up here and do the same old. So we are already engaged with some third parties around some interesting products outside of the core solution for clients, which we would hope to launch with them quite soon. So yes, we will need to compete in terms of the core credentials, but essentially when people talk about risk and analytics, we will have in-house capability with actuaries within our team. So we won't have to go and fight for the resource. We will have that capability. That investment is already in place and planned, so that we can be modern in our thinking and modern in the solutions that we provide for our clients.
And I think aligned to that, clients ultimately want price and service. But if we can build that out and attach that to innovation and our ability to be truly nimble, because we are a small team and we can make quick decisions and quick investment strategies to deliver products that the clients will really value.
I was going to ask about what's the value of having no legacy these days. I was at a conference yesterday, and there was Paul Brand, and obviously, a business like that with Convex starting with no legacy, they've been able to, are there any things that are right at the top of your list to say, well, now I don't have to deal with 30 years of legacy. Now they've got a blank sheet of paper. What are the things that I just wouldn't bother doing anymore, or things that I'm dying to get rid of that would have been really hard to change at my old business?
Well, I think obviously the absence of legacy means we start with a clean sheet of paper. So everything we do is focused on the go forward rather than what's behind us. So we can spend all of our energy innovating and working with clients and prospects as we move forward. We don't have legacy systems to deal with. We're building out modern, advanced systems here, taking advantage of some of the tools that are already available and others that we are still evolving.
Would you be developing some of those things yourself, do you think?
I think in partnership with the capability of the broader group. I'd also add that in terms of legacy, we've all had responsibility within the larger firms with legacy and inherited talent that we've tolerated. Here, we're able to bring in the talent that we want and ensure that they will be optimised in terms of the focus that they will have on the front end, and not get caught up in some of the back end legacy that inevitably happens with these firms.
I want to get some sense of what sort of scale is your ambition. Is the ambition to build something that's sort of niche within a niche, or could you go toe to toe with anybody in aviation broking?
So we've got an aspiration to have capability in all of the sub-product lines. We've led. It's obvious we've led in the manufacturing space with the talent that's been attracted to date, but we have aspiration to build out across, airlines, general aviation, satellite. We've got the potential to look at reinsurance and in terms of the alternative product development. We're looking at a financial solution which Marcel's been involved in and can perhaps comment on briefly.
What about that and the scale of the challenge that's ahead of you? You've spent all of your careers working at very large brokers where perhaps the mantra is sort of to institutionalize the business, where no individual could just walk off with an account. It's going to be one of the big three's accounts, and it sort of always will be. How are you going to sort of try and pry some of that business away from the big brokers?
Well, we can't discount the issue of institutionalization. However, when you look at the large brokers, and aviation in particular, very often aviation is the only product line that team is representing to the client. The client is choosing other brokers for the D&O, the property, the casualty, the marine. So I think the concept of one broker holding the entire relationship is much rarer today, and certainly Spitzer demonstrated that after 2005. As some of the larger corporate clients fragmented their purchasing. We think today in the market we face, the clients again are going to be looking for service and price, and they need the very best advice in a market that we see ahead of us. And therefore, we've already had some very interesting conversations with prospects and clients who are interested in talking about our offering, our team, and how we can possibly assist them.
And do you think it's going to be hard? I mean, big brokers have got a huge amount of financial resource to sort of do things almost at a loss. I mean, if they don't want you to have it, what's this sort of how much kind of runway have you got from your backers in terms of how long have you got before you might have to start showing a return on some of the investment they're making?
So this has been a thoughtful and well laid out plan. Of course, they're looking for a return, but they're looking for a return in a reasonable and orderly fashion. I think you're right. Did we expect there to be a reaction from the bigger firms in terms of the fight for talent? Absolutely. But we offer something quite different here. Let's be really clear. Our story is entrepreneurial, the one of entrepreneurial spirit. It's interesting for people. I don't think anyone's said to us we don't really want to talk to you, whether that's a prospect, a contractor, or a potential colleague. And one thing that certainly for me was something that I thought was incredibly exciting is we've got the opportunity to build something from scratch, and we will create the culture. When I say we, Marcel and I will lead it, but we, the collective we of the team, will create a culture. The cultures of the BGC insurance family are very different, and we will have a different culture to those firms, which means we've got the ability to create something. And I worked in one organisation for a very long time, and within that period, the cultures probably felt different at different phases, depending on the leadership, the structure, etc. But we've got an opportunity to create something, and I think that's truly exciting.
Yeah, and I think the larger brokers can always apply some concept of discounting, but ultimately the compensation the broker receives is only a tiny proportion of the overall price paid by the client. At the moment, most clients are focused on premium and how much their premium is going to go up by. Clearly, broker compensation comes into it, but it's only part of the ingredient. And
in the plan, you said you've got just over 30 colleagues now with you. What's the plan? Is that on track, and what's the critical mass of team building? What to be a credible aviation broker? How many people do you actually need, or what does your plan say?
So, we've as I said, we've got aspiration to build out capability, and that will map with talent. So, we're not going to get drawn on exactly who or how many, clearly.
But you sort of feel you're about right at the moment. Or
I think it's pretty
to service what you've got.
I think it's pretty impressive that we've got so many so quickly, and there are a myriad of reasons as to why that is the case. Essentially, we've talked to some prospects. About 31 people have made their own decision around a personal RFP.
And I think to support Philip there, 31 people, largely coming from the aerospace side of the business and or the financial solutions team that we're building. So clearly, as we have ambitions to diversify into the other product lines, inferred that number could increase dramatically. Certainly, we've got the investment appetite subject to the strategy that supports that. So we are currently already operating in the US and the UK. We're looking at other strategic opportunities that present themselves, and actually people are reaching out to us to assess whether or not we could be a good fit for them, either as an employer or as a partner to team with.
And when you say financial solutions, obviously I'm thinking, I would think about some of the credit insurance products that have been linked to aviation from other places. Is that the sort of thing that you're looking for?
Well, very much so, Mark. It's no particular secret.
The financing of aircraft.
It's no secret that we've hired some of the individuals that were associated with developing similar products at other broking houses. We've also hired from industry. Kostya Zolotuski has joined us, having resigned from Boeing, where he's very much involved in aircraft financing sectors. So we're not going to say too much now, but we're certainly putting signals out there. We've hired from the underwriting world, Mark Esdale, who joins us from Sompo, and I think that states a intention and ambition to have an aviation MGA in the credit space. And we're not at the point where we're launching the product, and that'll certainly be something we'll be happy to talk to you about in more detail. But the very clear signals are there to the market broadly that we have ambition there, and we see that very much aligned to our strategy of supporting the airline industry and the aviation industry more broadly, not just in the conventional space, but in the aircraft credit and other derivative areas. We've got a number of other areas that we're working on that we think will be of great interest to the clients.
Just one last thing before we start talking about perhaps the aviation market more widely is wanted to ask you about what was the genesis of this? Was there a moment when you suddenly had this light bulb went on or something? When maybe we were having a drink or something when you said we've got to do this now. This is now is the time to do this new venture.
So we go back a long way. We were colleagues back at Willis in the late 80s and early 90s, and then we competed at times quite viciously, I seem to recall. But there was always a positive accord despite that competitive edge. I've been thinking about, after 30 years personally, the next phase of my career and what I wanted to do, and decided that perhaps now was the right time to do something different. Whether or not, and you alluded to it, a major transaction across the industry was the catalyst, but for sure, in terms of Marsh and JLT, for me, that struck me very clearly as a generational disruptive talent opportunity. And so that got my sort of juices flowing about, okay, what does that mean for me in my incumbent position and the firm that I was working for, and history would suggest that they didn't fully capitalise, or haven't to date fully capitalised on that opportunity for a variety of different reasons. So whether that was the moment, I couldn't really say for sure, but I'd been reflecting for some time about the chance to do something different, and this is quite different, but it's incredibly exciting, and I think it's opportunistic given market conditions and the fact that if you look at this particular marketplace, which is what was appealing to the backers, was it being dominated by so few and was fairly static in terms of movement of business and people.
That's the same for you, Marcel.
I think absolutely. Well, having been at Marsh and then moving to JLT for a short time, and then potential for going back to Marsh. I think it introduced an opportunity to evaluate opportunities. Clearly, the EU made a ruling in terms of the aviation business of JLT, and Marsh wasn't able to acquire that, and it was divested ultimately to Gallagher. So, I'd been evaluating for a period of time what I might do, and I think actually, as we talk to talent across the industry, so have they. I mean, at this point, I think almost every individual in the industry is making a decision, and that decision is, shall I stay or shall I go? And actually, there are a number of opportunities for people to move. In fact, not just to Piiq. I mean, as we clearly know, there are other new entrants, and we welcome that competition. We see that as a further disruption into the industry, and we like the concept of competition.
Right. Well, Piiq is a particularly interesting development, but it couldn't be more interesting from some of my perspective, in that the market you're operating in is at a particularly interesting time, whereas perhaps any time in the last 15 years or however long this soft market has been going on, it might not have been such a good time. So can you sort of run me through what are the main highlights? It seems I wouldn't know where to start with aviation when we've had a large product loss, we've had withdrawals of capacity in different places. This market, obviously, we're clearly it's not just a hardening market. This is a hard market in aviation, and you've probably been through one or two of those before. Just can you set the scene of sort of what happening in different parts of all the different facets of the aviation business? I don't know. We should start maybe to talk about airlines and sort of things that make front pages, and where we are with that, and also where we are in terms of supply and demand as well.
Sure. Well, I think we should go sort of slightly deeper than that, because I think for a period in 2018 and the early middle part of 19, there was some signals across the entire market. I think we called it a complicated market or a complex market. It was a transitional market and a firming market. But if you go back to 2018 and the work that Lloyd's, for example, did with the Decile 10, there were some pretty strong signals around the aviation and aerospace business. It featured rather heavily as a product line. In fact, decisions were made by Lloyd's around certain syndicates, aviation businesses. And in fact, if you go back even further than that, I think if you spoke to Bronick at Hiscox, he said when they pulled out of aviation, he'd done his own internal Decile 10. So what does that all add up to? Well, it was a distressed class in terms of profitability. So inevitably, and we've seen as it plays out, even most recently with the decisions made by Amlin, to withdraw, that there are key players, and some of these players, in the case of Amlin, were market leading, that have taken a decision as the market is moving that this is not a part of the business that they want to play in. So, each client is different. For a period of time, a long period of time, the market was fascinated with benchmarking. The market has operated a vertical placement, what the brokers refer to as vertical marketing. So getting actually the benchmarking was a reference point rather than really what the clients were paying. And
just to clarify on vertical, it's effectively composite pricing where everybody puts their own price, everybody on a slip puts their own price, and you, as the broker, you tot it all up. And I don't know if you play 50% at one and 50% at two, then the price to the client is 1.5. Is that right?
Something like that. I think the broker would say that they had a little bit more to do with the ultimate composite pricing than totting it up. But yes, it's more of a free market.
My job's to simplify things for non-experts.
It creates a more dynamic market than a single price across the marketplace. And so it's always been there's been a competitive edge to it, which has to some extent driven the pricing. So each client is different. When they come to market, their history will be different. But what's happened in the past in aviation or the broader aerospace is, if there's been a distressed sector, let's say for example airlines, perhaps at that moment the manufacturing results were better, and therefore to some extent there was a global perspective across the book as to the entirety of the result. I think what's happened in the class in recent times is they're all distressed in their own way. The manufacturing sector, the airline sector, the GA. We've seen in the general aviation, some significant markets pull out. We've seen some catastrophic losses. A very significant tragedy last week in the US. Helicopter rates are moving rapidly, and whilst somewhat associated even in the space market after a long period of incredibly soft market and profitable business, some significant losses, which is driving that market hard now as well.
Actually, we often describe the aviation insurance market as a bit like the airline industry. It's a supply-demand business, and you could argue that for a number of years some insurers have been selling their product underwater, much in the same way as airlines can subsidise certain routes. But very often in the airline industry, an airline pulls out of a route because it doesn't make money, someone else jumps in. And actually, we're starting to see that happen in the aviation sector as we look at Fidelis coming into the insurance sector, if we look at Convex opening up into that area, Helvetia in Switzerland, and other people assessing their appetite for increased lines. So as Philip said, as one insurer, Hiscox or Amlin, decides to part company with that particular sector, the opportunity to look at new entrants and increased capacity emerges, and that's our role as the brokers, to identify those opportunities and to bring those forward to the clients.
Before, there was quite a lot of logic in some of the, particularly perhaps let's say in airline business, where over a long period of time the attritional loss ratio of airline business has just got better and better and better, i.e. it just got safer and safer to fly, and they had fantastic risk management programs that they had been implementing and were a paragon of virtue. As an industry sector, a fantastically safe sector, and therefore it was logical that underwriters would be reducing premium along with the risk itself. Is there anything? Is it just a supply side thing, or is there anything that's changing in the loss trends? Obviously, we've seen in the casualty world, we've seen this in non-marine casualty. We're starting to see very long-term casualty trends ticking up, and claims inflation going ahead of what people's business plans are, and therefore that moving the market, or at least changing the market's appetite. Is there any of that, or is it more about the supply that there'd been too much competition, too much capital chasing the business, and now some of that capital's pulled out, and therefore the price can rise finally?
Well, I think you've got to separate the two issues, really. I mean, supply and demand is one issue, and then it's about the fortuity of accidents and where they occur, which liability regime they occur in. But if you look back over the last decade or two, we have seen overall loss ratios, total loss ratios, accidents involving Western-built aircraft reducing. And that's credited, in part to the manufacturers who've been building better and better aircraft with more and more technology that the pilots can rely on, and in part credited to the airlines themselves as they apply their own training regimes, and as many of the emerging airlines have modernized, plus many of the older aircraft have been retired, predominantly down to fuel efficiency concerns. So we've seen older aircraft being removed, newer aircraft coming in, and therefore largely the overall loss ratios have improved. Loss accident rates have improved. What we can't, of course, prejudge is where those losses are going to occur and how many people will be involved. Aviation is one of the safest forms of transportation, but unfortunately when it goes wrong, it can go wrong catastrophically.
And obviously on the casualty side, that's beyond the control of aviation. So when you do have that accident, if passenger liability cost just goes up, that's probably due to with the US legal system or anything else, which is certainly nothing to do with aviation, would you say?
No, I think it's
or are those costs filtering through into aviation just like they are into many other non-marine classes?
Well, cost of life is increasing in every regime, whether UK, EU or in the US. Much of it down to liability regime and or plaintiff counsel activity. So I think that it's also compounded by low interest rates, because any settlement today that a family receives for the loss of a loved one is going to drive a much lower return over time. So I think the low interest environment that we've seen for the last decade or more has had an impact as well.
Yep. And so I'm only driving at that because I wondered how long the aviation market, I think historically I would have described as being slightly more volatile than other markets because of the fact that you've got because it's non-correlating and everything goes very well for different periods of time, and at the same time you do on the demand side you've got to buy very big limits, and then suddenly once the supply demand thing switches, the airline still has to buy the $2 or $3 billion limit, so they have to just pay whatever the final marginal player on the end to complete that placement is demanding. But so I'm asking about that because I'm wondering how long you've got this great long experience of the aviation market. How long does your gut feel tell you that you're going to have this hardening? How long is it going to last? For example, also gut feel of where we are of some of the business that's being put on the books as we speak now, or Q4. How profitable is that actually getting underwriters back to a level of profitability that will start making the sector be attractive again or not, and then we'll bring the cycle back on again?
So I think there are a number of factors to that. It's not just simply about supply and demand. So I think as the broader market came through, what I referred to earlier as that complex market, leadership, so CEOs across the industry were demanding greater underwriting discipline across all classes of business. So I think the line underwriters were under pressure to assess their pricing and risk, and to some extent were under greater scrutiny than they ever had been before. So I think you were at a conference earlier this week, and certainly the signals coming out of that senior echelon, certainly of the London market, was of a hardening market through this year and into next year. So let's not forget, from an airline perspective, this significant number of the risks are placed at the back end of the year in Q4. So, would we anticipate the market to continue in the vein that it has and perhaps accelerate further? I think we would observe that to be likely. When the commentators and experts talk about into next year, we're talking about a big chunk of the business renewing in Q4 of next year. That's an awfully long time away, and it will come down to how profitable this year looks like in sector and more generally across the insurance P&C market, whether that acceleration, as we anticipate, will encourage further new entrants and what that dynamic looks like.
Yeah,
and loss activity for sure.
And how just to remind listeners, what sort of prices rises were happening, say in airline in Q4? What sort of average?
Well, it's a very broad statement, but you could take an average of 20 to 25% increases for an airline that hadn't suffered significant losses. Rather depends on the growth and the size of the airline. Actually, market goes down to supply and demand. Very often smaller airlines, narrow-bodied, either smaller buy lower limits. If they have less reliance on limit, there's more imputed capacity available.
So do you think that there's a chance of getting compounds of 20% on 20%? When we're coming to Q4 2020?
Well, I think certainly the insurers' ambitions are in that direction. They're looking for a trajectory of 2 or 3 years to rebase where they feel they need to be. As brokers, it's for us to work the supply and demand curve, and so we're evaluating alternative capital, and as we referred to earlier, there is new...
Has you got a feeling that, with this 20, have they actually got somewhere that's... Are they near the, technical, actuarially sound pricing where they are, or do you think there's more to come?
Well, I can't say we always see their actuarial pricing. I think for insurers, they have been on a downward trajectory for a decade. At the same time as aircraft values and liability awards, as we discussed, have been increasing. So, again, our role is not to argue the needs and profitability of the insurer, but rather to work through the dynamics of the market and the sort of supply-demand curve.
So you just got to play it by ear. I mean, you're the brokers, you're out there to get the best deal for your clients, and that's just the way it's going to be, right? So.
Absolutely. And, in my experience, where a market or marketplace or single carrier signals intent around a percentage increase, and I've seen that before, that genuinely doesn't succeed because it creates a reference point which then gets attacked through a variety of different means. I think we shouldn't, and Marcel referred to it, but we shouldn't lose sight of the fact that the soft market prevailed for a very long time. So there were significant reductions in that period. So, there has been some correction, but at the same time, it's a growth industry, so that shouldn't be lost in the translation of rating either.
And hard markets never last as long as soft markets, it seems.
Well, indeed. I'm trying to think over our 30-year careers or so. I mean, I think we've seen one or two really hard markets, and the rest of it has been broadly soft, or some version of that.
And I suppose, and talking about degree of hardness, I suppose people would define a really, really hard market as where you just can't get it, you can't quite place 100% of anything, no matter what price. Is it near there, or can you still clear an order as long as you get the right price?
I think for the most part, I think there were one or two placements which were distressed, very distressed. So I think that created some tension. But I think ultimately, for the most part, that there's capacity. It's then a negotiation which will be on a case-by-case basis.
I mean, rarely have we seen situations where risks are unplaceable. It's just a question of price and structure to achieve that price. And clearly we also can recognise that many of the clients, the manufacturers already do this in part anyway, and some airlines have in the past. There's the potential for them to take retention. I mean, the airlines are more and more well capitalised, varies obviously by individual client, but there is the ability for them to take some risk and not rely on that last 5% to complete the risk.
Be crazy of me to have a manufacturer's risk, a product, aviation product specialist in the room and not ask them about. Obviously, we've had very high profile product related. One presumes it's a loss. I'm sure that the lawyers are still all talking about all that kind of stuff, so we don't have to talk about it specifically. But it's been a long time since it seems to me, so certainly from sitting outside, it's been a long time since we had a potentially systemic loss in the marketplace like that. So how has that affected the dynamics of the market?
Well, look, Mark, obviously I don't want to be quoted on specific clients, and actually wouldn't be appropriate for me to comment on.
No, that's fair enough. I just want to talk about the market dynamics in the light of what the things that have been happening.
First of all, I'm going to rely. I've always taken the view for my clients. They build great aircraft or great products that make the airline safer. Now, unfortunately, sometimes accidents happen, and sometimes that's weather, pilot, other effects that come in, and occasionally there can be allegations of product defect. But at the end of the day, fundamentally, the manufacturers set out to build great aircraft and great aircraft components, and have driven some great innovation to make the transportation, the planes that we get on, much safer. So ultimately, where we see claims percolating into the insurance market, very often it's going to be driven by the plaintiffs, who will take opportunity to pull the manufacturers in, as well as the airlines. Obviously, from an airline liability regime, there are often limits that apply in terms of what the plaintiffs can receive, which is set by statute. And by pulling the manufacturers in, plaintiff lawyers will hope to circumvent that. So ultimately, it's a marketplace, and over the 20 or 30 years of my career, the manufacturer portfolio has, to an extent, subsidised the balance of the aviation insurance market. So if we see losses occurring right now, well, it's come at a particular time where it's just 1 year in many where those manufacturers have contributed to the overall premium pot. So, and
you're sort of implying a certain sort of maturity in the market. So you're saying underwriters are quite sanguine about this kind of thing, to think that it's likely to happen one day and that they're just going to keep trading through. It's not put anyone off.
Look, the manufacturers typically have a attitude of long-term relationships with the insurers. So we buy on the Gregorian clock very often with 12-month policies, although the manufacturers themselves over the last few years have extended that concept to long-term policies for many, and many of those accounts are in the middle of those long-term policies, very often up to 3 years. So I think the insurers take a long-term view on them. The manufacturers tend to be around for a long period. There is M&A activity, but we rarely see manufacturing failures. In the airline sector, fortunately, some airlines do go out of business or are subsumed into others, but the manufacturers, by and large, the manufacturers that were here 5 years ago will be here in 5, 10 or 15 years. So it's a long-term buy for the market.
So it's fairly healthy, is what you're describing, a fairly healthy situation where there's not likely to be any dislocation, where the insurers are going to stay true, the clients are going to stay true, and everything, and the things will be worked. The loss will work its way through, and everything will be okay.
Look, everyone has their management pressures. The client have theirs, and the insurers have their own. So I think it's about working through the tensions of particular situations. And once again, I'd say, the clients want to have long-term relationships with the insurers, but ultimately they have balance sheets that they have to consider, and those manufacturers have the ability to take significant retentions through captive or other structures if indeed premiums become less attractive.
Phil, I wanted to ask you something about, you mentioned about reinsurance being a potential opportunity. We've just come through the one-run reinsurance renewals. So did reinsurance have anything to say in the aviation market, or was there any influence from reinsurers, or are they sort of happy with what's going on in the underlying and just happy to sort of take whatever's going on there?
I think they looked at the underlying book and some significant losses and adjusted their perspective on any individual underwriting unit to whether or not they wrote those policies or not. I think it was a somewhat measured response from the reinsurance community.
They're just supportive, that they're happy with the price action and the fact that the remedial action's going on in the primary world. Is that right?
Well, I think if you look back over time, soft market, in all that period of soft market, generally there was an underwriting return to a point, and I think the aviation reinsurers were highly profitable in that period of time. Now, there've been some events that have adjusted that, but they would be looking for a reaction, and I think the reaction so far has been something that would meet their expectations.
And another thing that specifically I wanted to ask about was hull war. Obviously, it's an interesting niche within the aviation niche, and often at different times as a journalist we've highlighted the premium pot seems to have been blown out every other year. It seems to wipe out 10 years of premium. I don't really know. So what's happening in that marketplace? Is there any particular turmoil there, or any opportunity there, do you think?
Well, it's a small, highly specialised market, as you've said. There are triggers in the policy construction that means that the insurers can invoke some things to create a different flow of premium than they originally encountered. It's a significant loss. You're right, the premium pool is relatively small, and in the past, following a major loss, there has been a premium reaction, or rating reaction from the marketplace. They have got some triggers where they could create a situation where they readjust everything, but I don't think we're at that point right now.
Also, I think aviation hull war largely placed in the marine war market, where the losses, of course, are mutualised. Now, ultimately, profit and loss has to apply for the insurers, but it's largely placed outside of the mainline aviation insurance market.
Well, I think I've come to the end of the general list of my questions, but one, I want to wish you well with what you're doing, but do you think there's anything we could have discussed that we haven't discussed yet in our time?
I think we've used the time productively. I'm 31 days in. It's been a whirlwind of a month. I'm excited by what's been achieved to date. We're very early on our journey. I'm excited about the disruptive opportunity, the technology opportunity, the talent opportunity. I'm interested when I can to talk to clients, former clients and prospects, and this all adds up to something that will be a dynamic, a different, and hopefully for all a compelling proposition.
And I've got one last question. It's a bit Columbo. The great thing about being a journalist is being able to ask sort of slightly stupid questions that have been bugging you for years. And actually, I was just looking at your business cards in front of me, and Phil, you're the CEO, and Marcel, you're president. And I'm, as a Brit, I've never really ever get my head around what the difference between president and CEO. Because so often, perhaps in US companies, someone is the chairman, CEO, and president. and I was anyway. What's the difference between your two roles?
Well, a chairman, CEO, and president gives someone a lot of power. Okay, we've set this up as a partnership. We will have different responsibilities. We're working through some of those specifics. We formed Piiq Risk Partners as an independent business. We're a Lloyd's broker. We have a Lloyd's broker number.
You've got your own board,
and when there's regulatory requirements around that, and so we're working through that. What we've found to date is a great accord. We reconnected. Marcel was working incredibly hard while I was in the garden. He's probably had to adjust a little bit as I've arrived, but 31 days in, I'd say so far so good.
So president's better than CEO, is that right?
Well, I think I get to have all the fun,
I'm still none the wiser. But it sounds, if you were co-CEOs, would that be okay as well?
I've never been a great believer in anything or deputies.
And actually, to be fair, we did talk about whether we would have titles at all. I mean, we want to have a flat society. I mean, obviously there has to be authority and sign off and some understanding, but more broadly, we've all worked in this business for a long time, and it's about working to our strengths and weaknesses. From my perspective, great to have Philip here from January. As he inferred, I was here for some 6 months, pretty much on my own. But our colleagues are starting to join us as we speak this week, and as we move into the next few weeks ahead, we're multiplying our leverage and our talent pool.
One thing I'll regret if I don't say it before we close is, and this has been reported in the press, we are attracting and are building a diverse team. We've got roughly 40% of the staff either here or en route here who are female. We're not looking to go in the highly experienced area of the market. So we've got some people who are young in their career that are going to gain great experience through this process as we build out a business in a very flat and open and dynamic forum for them.
So the message is just come and talk to you if wherever you are in your career, you want to, or even if you're not an aviation person, you want to make the switch. Is that right?
Sounds pretty good to me.
You're diverse. Okay, great. Well, thank you so much. I've really enjoyed talking to you, and good luck with your venture.
Thank you, Mark.
Thank you, Mark.
The Voice of Insurance is produced by me, Mark Gagan. Music was written by Anna Gagan and produced by Carlos Gagan. Check out more podcasts and written comment pieces at www.thevoiceofinsurance.com.